Hi, my name is Beth Blanco. I'm a certified financial counselor and a money mindset coach. I help people get their stuff together with their money. I've been doing it for almost 15 years now. When I first started in the industry, it was 2005 at the height of the ARM mortgage industry, the bubble as they called it. Shortly after I began, the bubble burst and everybody's ARM payments started going up, which caused, a banking crisis, which caused unemployment. So the banks got bailed out. People, lost their jobs. GM filed bankruptcy. Circuit City and Marvin's filed bankruptcy and no longer exist. It was crazy, crazy times. But I'll tell you what, it made me a much better counselor because I had to learn how to sink or swim and do it quick. I'm passionate about it today, but I wanted to leave you guys with 3 tips. Hopefully this crisis is going to be a lot less, dramatic and short term, a lot shorter than the last one. But I want to give you 3 tips to leave with you today that is good in any type of, whether times are good or times are bad. So the first one is everybody needs an emergency fund. And the time to plan for the storm is not when it begins to rain, but when the sun is out. So if you're able to right now, today, this week, whatever, start saving something and set it up on automatic. So like $20 or $25 to start or more if you can afford it, but I just really want you to build a habit. So do it with direct deposit. When you get paid, like don't even see it, treat it as a bill. Put it in a place that you don't have an ATM card. Make yourself physically have to go to it. But basically set it and forget it. And then when an emergency arises, it'll be there when you need it. The second one is a budget. And I'm not like this real strict person that says you got to have a plan for every single dollar of your money, but you should know what your income is, what your bills run, and what, and treat that savings deposit as like a bill, and then what's left over for spending and other saving. I'm all about loving your life. So if there's other things that you want to do, of course there is, right? Traveling, there's repairs that are needed and gifts. We want to have fun around the holidays. Then set those up too. Set those up and forget it as well. So you might have, $50 a month going into a holiday savings fund, for example. Those are the types of things. And then the third thing is have a plan for your debt. Debt isn't all bad. Most people have to take a mortgage to buy a house or even a car loan. Car rates have been phenomenal the last few years, and it probably makes more sense to finance it versus paying cash, right? But treat debt as something that needs to get paid off as quickly as possible. I love the debt snowball or debt stacking method. When one thing gets paid off, instead of putting that money back into your budget for spending, shift it to another debt and get things paid off as soon as possible. You can do either lowest balances or highest rates, interest rate. Highest rate saves you the most money. Lowest balances get you fired up. So neither one is a wrong plan. I just think that getting out of debt is a great plan in general. All right, guys, it's been a pleasure. You can find me online at Beth Blanco, or my Instagram is Beth McMahon Blanco, but you'll find me. And I've got a great resource if you want to check it out. It's my Get Your Shit Together with Your Money, my book that I wrote, and some other resources. And you can find that at fixyourmoneyforever.com. Thanks so much. Have a great night.